Did you know that every bank that issues credit cards has a nickname for those of us who never carry a balance on our credit cards? They call us the credit card deadbeat. That's right, it is actually a derogatory term that these bankers came up with many decades ago because we're the only ones who are what they call making their profit bleed.
Let the hate flow through you.
And I strongly encourage you to watch this 1-hour documentary titled The Secret History of the Credit Card by Frontline PBS that was aired back on November 23rd, 2004. You will see how we're still dealing with the same issues today with credit cards that we did over 20 years ago. And I'm fired up to talk about it in this video.
Having a lower minimum payment allows you to offer higher credit lines, which first of all makes your card product more attractive because people judge, even if they don't intend to use the whole line, they would rather have a higher line. The high balance accounts will be much more profitable than the low balance accounts.
Because they're paying interest?
Because they're paying interest on a higher balance.
While I play some clips from that documentary throughout this video, let me briefly explain what a deadbeat is. It's not what you think. Anytime you hear the word deadbeat, it's usually used to describe someone who is a lazy and irresponsible parent. But in the banking sector, if you're a credit card deadbeat, you're also known to the banks as a non-revolver or a transactor. And deadbeats have automatic payment set up to pay the credit cards in full every single month, and they do this so that they don't incur any interest charges or late fees.
The credit card companies hate people like me who pay off our bills every month, and I know that because I ran into a fellow I went to high school with on the street, and he told me he worked for a credit card company, and I told him about how much I use credit cards now. I pay them off every month, and he said, "Oh, we hate you. We hate you guys. We call you deadbeats."
They also only use their credit cards with the money they have, so they pay attention to the credit utilization ratio. In order to have excellent credit scores, you want to keep the utilization ratio to below 30%. The lower the better. For example, let's say I have one credit card with a credit limit of $15,000, but I always make sure that I don't spend more than $4,500 because that will put me at a 30% credit utilization ratio. And keep in mind that credit utilization makes up 30% of my credit score. So that's why it's important to me to keep my available credit as high as possible. And remember that the credit scores will consider the total sum of your credit utilization and the total sum of your available credit. For example, if I have 3 credit cards with $10,000 in credit limit for each credit card, then that's a total of $30,000 in total available credit, assuming that I don't have any balance on any of these 3 credit cards. So if I spend $3,000 on one credit card, that's a 30% utilization rate for that one credit card, but it's actually just 10% of my overall credit utilization because $3,000 divided by $30,000 with 3 credit cards is 0.1 or 10%. So don't be alarmed if you go over the 30% utilization ratio in one credit card, as long as your other credit cards combined don't exceed 30%. And I talk about this in depth with my private clients. So if you're interested in joining my private client program to get financial coaching and financial planning services, you can schedule a free consultation with me by visiting firestation.com/coaching. And I also recently launched a brand new website where you can sign up for a free membership to get your free financial resources by visiting firestation.com/resources. You do not need a credit card to apply whatsoever. These financial resources are absolutely free for you to use. And for those of us who never carry a balance on our credit cards, we earn an average of 3% in cash back on our credit cards, but it also depends on the type of credit card you have. So let me share some of the credit cards I always use. And if you have any credit card debt, I want you to ignore this segment of this video because I want you to focus on paying off your debt and not incur any additional charges. So first, I will always have an airline credit card because I fly Southwest Airlines pretty much all the time. I just use the Chase Southwest credit card to pay for my plane tickets. Because I'm a responsible deadbeat, I get to fly to see my family in California every year for free by using the points. Second, I have a grocery credit card because my family and I shop at Costco all the time, and we have a City Costco credit card. And I'm not by any means sponsored by any of these credit cards, but because we're a family of deadbeats, we get a 4% cash back on gas for the first $7,000 and another 2% cash back on all purchases from Costco. We even got the Red Hot Chili Pepper concert tickets by using this credit card to access pre-sale tickets at a discount. Third, I have a discretionary credit card. And anytime we travel to rent a car, buy concert tickets or sporting events, or try new restaurants, we use the American Express Platinum Card. Now, the annual fee on this is pretty high with almost $700 a year. The $700 annual fee is actually worth it for us Deadbeats because we use it so frequently and pay it off every month. The benefits and rewards that come with it outlast $700. Let me know in the comment section down below if you want me to create a separate video about this and how I take advantage of the rewards. And fourth, I have a hotel credit card and we have a travel fund in a high yield savings account that we put money away every 2 weeks. We have a Marriott credit card and we stay at Marriott or Marriott affiliated hotels every time we travel. We actually get about 3 nights of free hotel stay by using this credit card because again, we are deadbeats. So the way we do travel is basically we use our credit cards for all the purchases. And then at the end of the trip, we reimburse ourselves with the travel fund in a high yield savings account. So this specific pot of money labeled travel fund is exclusively used for flights, hotels, gas, restaurants, and other entertainment. Do you ever travel on a business trip for your company and then you later have to file reimbursement paperwork? This is exactly the same concept. When we book our plane tickets, we just use our airline credit card. When we book our hotel room, we use our hotel credit card for the rewards. When we book for anything else for the travel, we use our Amex Platinum. Let's say the total trip cost me $3,000 at the end of it. I just use my travel fund to reimburse myself by paying off each credit card I use to make the travel happen. In order for us to never carry a balance on our credit cards, we are always being intentional with how much we spend and how much we save. If we budget for a trip to Hawaii for $5,000, that's the money we're going to stick with. If we have to go over the budget by, let's say, $1,000, then we need to make sure that we either save an extra $1,000 or wait on taking the trip. We will never go into debt just to make the travel happen. I used to do it and I'll never do it again. Now, here's the downside. As soon as you become irresponsible with your credit card, this is when you become a revolver in the eyes of the bank and they will love you for doing this.
The industry's best customers are the 90 million Americans who don't pay off their credit card debt.
You had the credit card for a number of years and were paying on it regularly. We're never late. And as soon as you miss one payment, it's like all deals are off. Everything goes up. I mean, some of the credit cards we had were 9% or less. All of a sudden they're 24, 25%. It wasn't that we didn't want to pay off our credit cards. We got to the point where it was impossible. They weren't willing to work with us unless they got all their money as fast as possible.
If you spend $1,000 in 1 month and get a 3% cash back and you decide not to pay it off in full by the end of the month, that's 25% in interest that you could accrue over the next year. So even with a 3% cash back, you're losing a total of 22% in interest when you carry over the balance. Most of you watching my channel know this, but you'd be surprised to know that many people actually don't understand that carrying a balance on their credit cards is basically giving the bank extra money. What you should also never do is treat a credit card like an emergency fund or an emergency spending method. I did this. I always felt like I needed to have a credit card just in case something happened. If something emergency happens, that means it's an unexpected purchase. If I spend $1,000 on something emergency and I have to pay 25% interest on it, that's $1,250 in total purchase. That's absolutely insane. So instead, we will always have a fully funded emergency fund and avoid relying on our credit cards as an emergency use. Remember, cash is king when you go through a rainy day. And what people continue to do is put more charges on their credit cards. So if you spend $100 on something, you're not paying $100. You're paying $124 for whatever you purchased. When these late fees and interest start to accrue, you're gonna all of a sudden see thousands of dollars in credit card balance. But it would be hypocritical for me to say that I never did this because I was one of those people who carried thousands of dollars on a credit card and put more charges on it. I kept putting money onto the balance until I reached the credit limit. And I want you to share this video with as many people as you can who may not be good with their credit cards. And take a look at my total credit card debt back in 2013. The credit card rewards program was somewhat decent 10 years ago because the government at the time was encouraging American people to spend more money after the global recession ended in 2009 to 2010. People were still recovering from the high unemployment rate, but I didn't pay attention to my spending. I had 5 credit cards with an average of $9,400 in balance. I got this Chase Freedom credit card back in 2012, and I started spending $100 or $200 at a time, and I managed to pay the full balance every month. And then I started spending $200 or $300 because my available credit limit was $10,000. So I said to myself, I don't have enough cash to pay back in full this month, so let me pay it off next month. So 1 month turned into 6 months. And once I maxed out this credit card, I moved on to the next credit card. By the end of 2013, I had a total of $47,000 in credit card debt with over 98% credit utilization ratio. And I think I had like about $400 in total available credit by making minimum payments. So the point of me telling you all this is that I'm not completely anti-credit cards, but the minute you realize that you don't have the discipline to pay the credit cards in full, then you need to stop using your credit cards immediately. This is what's happening across the country and why we're in over $1.08 trillion in total credit card debt as of 2023. This has been an ongoing issue since credit cards became mainstream. And if you think that these banks like Chase, Bank of America, Wells Fargo, or other credit issuers would do things for your benefit, you're wrong. They're not our friends at all. This is the biggest profit-making product out there for people who don't use them carefully or without any financial planning. And here's what you want to take away from this entire video. If you're not good with credit cards because you have a hard time controlling your spending, stop using your credit cards. I did this. From January 2014 until December 2015, I stopped using my credit cards because I had over $47,000 in total credit card debt. I used my debit card and that was it. I started using my credit cards again in 2017, but this time with a fully funded emergency fund. And I swore to myself that I would never use credit cards as an emergency fund ever again. And I promised myself that I would never spend more than what I planned for in the first place. Am I an anti-credit card person? Of course not. What I am is being absolutely against credit card debt. I want you to become a credit card deadbeat like me. And this has been another deadbeat of a video, and I hope you got a lot out of it.